odds for a March and maybe even a May rate cut continue to go down. The odds for a June rate cut are now at 94%, and that is when your next guest sees the first cut as well. And while she only sees 3 cuts in total this year, she also sees catalysts in place that could fuel the next leg of a bull market. Joining us now, Katerina Simonetti, Senior VP and Private Wealth Advisor at Morgan Stanley Private Wealth Management. Katerina, good to see you again, especially in the daylight hours. What are those other catalysts that you see?
Well, Brian, thank you for having me on the show. It seems that the market is, all involved in trying to figure out exactly what the Fed is going to do, which is, of course, impossible. We know we are not going to have any more rate hikes, and we know rates are on their way down. We just don't know exactly, when this is going to happen. And Jay Powell on in his recent address, said that the March is most likely too quick and that they have to be patient given the strength of the economy. So we have to wait for the data to come in and see if we actually are going to see the sufficient economic slowdown. But our goal is the rate cut in June and all in 3 rate cuts for the year.
Okay. If we change the rate cut forecast again, because let's be clear, we were at higher odds. I mean, just because Wall Street has 94% chances in June, that could be adjusted back either way. We've already readjusted in the last week or two. What if that 3 rate cut chance goes down again to 1 or 2 or 0?
And Brian, that's absolutely possible. I mean, 0 is highly unlikely because, there are expectations that, they're going to start and go into the easing mode. So most likely we're going to see some rate cuts, but data will have to be supportive of this. And, we see the earnings that are coming in, somewhat mixed, so when we look at the sectors and the way that they're positioned, overall this year, we actually see a lot of opportunities, specifically in sectors that are embracing digitization and the cost cutting, through the use of artificial intelligence. And this doesn't just involve technology. This involves healthcare and industrials and financials. So, of course, there are expectations that rates are going to be lower and the overall environment is going to be, a little bit more supportive of success, but Fed is going to do what they will do. And as Jay Powell said, they have to be patient. They have to wait for the data to come in. And that's most likely what they're going to do.